Hey gang, welcome to Time in the Market, the investing channel with a long-term focus. We've got another winner here. WBD is up 30% today after news broke that Paramount Skydance is preparing to make an all-cash offer to take over WBD before WBD can even split off into Warner Brothers and Discovery. It'll be interesting to see what the actual offer is, but obviously the market thinks it's going to be a sizable premium over what it was trading at this morning, thus the stock being up 30%. And something like this just seems obvious in hindsight. You look at it up 30% today, up 134% in the past year. When I did my videos about WBD, I've done a couple. I'll link them down below. I sort of talked about how this is a cash flow behemoth. Yes, it's shrinking, but it was producing, 20% free cash flow yields, 24% free cash flow yields when it was trading in the $7 to $8 range. On an enterprise value basis, it was still in the mid-teens. That sort of thing is pretty impressive, and eventually somebody's going to come sniffing around. I pondered if it would be one of the big tech giants like Google or Apple, especially when the split happened, because they didn't want to deal with the television side of the business. But it seems like, at least initially, it's Paramount Skydance, and I could easily see this become a bidding war as well if somebody else is interested. Paramount Skydance obviously already has television channels. They want the whole company. They don't want to wait for the split, and they probably feel like if they do wait for the split, somebody else will be in there trying to steal away the prized assets of the studios and the streaming business, and they want to prevent that with initial bid before the split even happens. And the interesting thing here is that Paramount Skydance just went through its own merger. The Ellison family, which owns Skydance, bought out Paramount, merged it together. Again, a smaller business buying a larger business, merging it together to form Paramount Skydance. Kind of the same thing happening right now. I think there's going to be a substantial amount of funding needed from probably the Ellison family themselves. They want to create a global media empire here, and this is one way of doing it. And the interesting thing is that you've got Larry Ellison, who's friendly with the president. I think this is going to be one of those things that in any other administration, a merger of two television giants, two studio giants would probably be declined and blocked. But in this administration, I don't know if that's going to be the case. I think the reality is that if David Zaslav accepts this offer, the likelihood of this actually happening is pretty high, and it's going to be an interesting merger, and I totally get why this company is doing it. If you look at the last analysis I did of WBD, again, it was trading way lower than it is today. I think I had something like a fair value of $12 at the time, and it was trading around that range. Now it's trading at a $40 billion market cap, a $73 billion enterprise value. On a trailing 12-month basis, that's still an 11% free cash flow yield, maybe a 6% free cash flow yield on an enterprise value basis. On a 2025 estimated basis, it's a 9.3% free cash flow yield, 5% on an enterprise value basis. And that's not like super amazing in relation to where it's historically been, but what you're going to get when you combine these two entities is economies of scale in a big, big way. And I think that's really what management here is thinking. When you look at Paramount Skydance, they just went through their own merger, Skydance and Paramount. They're cutting costs there in a big way. They're looking at this $30 billion business that has low single-digit free cash flow yields that used to have, higher single-digit free cash flow yield, sort of making sure that it gets back on that track, gets back on growth, focuses on growing streaming, signing some sports deals, etc. And now they look at this other entity in Warner Brothers Discovery that has $40 billion in revenue on their own, that even after this bump is valued at $73 billion. You combine the two, you're looking at a $70 billion a year business that suddenly has more negotiation power when it comes to television deals, maybe makes their legacy media landscape a bit better. You've got these two separate streaming services that are growing, that are expanding. Maybe you combine those together. You can certainly save a ton of money on production studios, movie production, save a ton of money on back office stuff, on technology stuff, etc. That's really where their head is at. They're going to see this business as, hey, we can buy WBD. We can probably fund it with either debt or just, take money from the Ellison family, because they certainly have a lot, and they're suddenly going to be majority owners of this combined entity, of this global news and network empire that has, the biggest television production in the world, the biggest movie production in the world, etc., and save a bunch of money on the back end stuff. So your $70+ billion revenue business suddenly generates free cash flow at 10%, 11%, 12%, and you're trading at a $70 billion market cap, $110 billion enterprise value, and generating $7 to $9 to $10 billion in free cash flow. That's what they're aiming for. They look at what Disney looks like. They look at what Netflix looks like. If they get to those levels, Netflix at $500 billion, this is still potentially very cheap if they can really grow their streaming business successfully, if they can maintain that legacy TV business for a long enough time to transition the money that's being made from that side of the business into the streaming and studios business, and potentially do their own spin-off as well eventually. They look at what WBD is planning to do. They don't want to let that happen because somebody else is going to pick off the business they want, which is streaming and studios. So if they buy it themselves, combine it, sort of look at their own offerings. Hey, we've got studios, we've got streaming, and we've got legacy networks. Maybe we do our own little spin-off where we have a better version of what Warner Brothers would look like with just streaming and studios, and a better version of what Discovery would look like with just their legacy television networks. And we'll go from there. We'll spend a bunch of money, but we're the Ellisons and we have a bunch of it, so who cares? Oracle just went up a bunch of percent, and maybe they're selling off a little bit and using that money to fund this purchase along with some debt and other things that they may get. That's kind of my take on this. I mean, it seems like a very interesting play from Paramount Skydance. It's often weird to see a company that's trading at a $30 billion enterprise value buy a company that's trading at a $73 billion enterprise value. But when Skydance bought Paramount, they're a much smaller business. It's just dependent on who has the money to fund that sort of purchase and how they're going to handle it and who's going to become the majority owner. And I think at the end of the day, the Ellisons, if this happens, are going to be the majority owner of Paramount, Warner Brothers, or whatever this is going to be called, and that's their goal here. I like it as a shareholder. I probably just plan to hold my WBD shares. I don't plan to sell any, because if it doesn't happen, I'm happy to hold through the split that's eventually going to happen if Warner Brothers stays as a separate entity. Obviously, there's some risk with the DOJ and whether they allow this to happen or not. Obviously, there's an unknown as to what this offer is actually going to be. The stock spiked into the 16.50 range, or maybe even higher, almost $17. Now it's in the 16.20. And what's funny is I was buying today, just this morning, and I bought another 100 shares at $13, and I was like, well, it seems like something's happening. The stock's going up, the momentum's there. I did not expect this deal to be announced so quickly. I did think that my end game here was an exit through some sort of acquisition. I did not expect Paramount to be that exit, but I guess we'll see what happens. So let me know your thoughts about this, guys. As always, guys, this is not investment advice. Disclaimer, this video is purely for informational, educational, and entertainment purposes only. It is not investment advice. If you have a comment, let me know what you think down below. As always, like the video, subscribe, and thanks for watching. And if you have any suggestions around any companies I should look at, leave a comment with that as well. So, bye.